If a client says, "What are the odds I get audited?" your answer can't be low, so go for it. Circular 230 treats that as the audit lottery. When you give written advice or prepare a return, you're not allowed to factor in audit chances or whether the IRS will notice an issue. On the EA exam, they love this because it's simple. Audit risk is never your justification. Here's the prohibited thinking. The law is shaky, but the IRS only audits 2%, so we'll take it. That's exactly the Randy and Paulette scenario. Even if the audit rate is true, it's irrelevant. Your job is to evaluate the position on its merits, not on detection risk. If you catch yourself saying, "They probably won't ask," you're already in Circular 230 danger. So what replaces audit odds thinking? 2 words: support and disclosure. If a position lacks a reasonable basis and you don't disclose it, you're inviting preparer penalties, and the client may face accuracy-related penalties. That's the Rochelle and John example. Big travel deduction. Not supportable, not disclosed, disallowed on audit. The problem wasn't bad luck. It was a bad standard. Now, the more nuanced exam favorite. A position can be contrary to IRS publications and still be taken if it's supportable and properly disclosed. Hazel's client had a complex issue. IRS guidance says one thing, but a recent court case supports a better result, with more cases pending. Hazel estimates a 30% chance of success on the merits, believes there's a reasonable basis, and discloses using Form 8275. That's not an audit lottery, that's compliance. Practical red flags show up in client conversations. Listen for: "Everyone does it," "My friend never got audited," or "Just put it on and we'll see." Your response should pivot to substantiation and reasonable inquiries. If a client claims a $50,000 art donation, you ask about the qualified appraisal and required forms, and you can't ignore facts you already know, like preparing the parent's return showing the child lived elsewhere. Finally, consequences. Circular 230 sanctions can follow disreputable conduct and reckless practice patterns, and preparer penalties can stack on top. The exam may also test that you're responsible for your own work environment. Ignoring a partner's sketchy credit claims can still get you sanctioned. Bottom line, you don't get to gamble with compliance. You document, you research, and when appropriate, you disclose. Which of the following is specifically cited as conduct that could trigger sanctions against a tax preparer, according to Circular 230 Section 10.51? The choices include a felony arrest for breach of trust, parking tickets, conviction on a criminal offense charge, and a felony arrest on a criminal offense charge. Think about it. What does the rule actually list? The correct answer is conviction on a criminal offense charge. Circular 230 Section 10.51 lists conviction of a criminal offense as disreputable conduct that can lead to sanctions. Attempting wrong choice is a felony arrest because it sounds serious, but the rule is looking for conviction, not just an arrest. Under Circular 230, what is a tax preparer required to keep? The options range from keeping copies of every return to keeping a list of clients and types of returns. And some choices add extra requirements like hard copies only. Think about what Circular 230 actually requires: copies, a list, or both. The correct answer is keep either copies of all returns prepared or retain a list of clients and the types of tax returns prepared. Circular 230 allows either approach. A tempting wrong answer is the one that adds extra rules like hard copies being required. That sounds safer, but it's not what Circular 230 says.